Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Hi, this is Sive Morten. Welcome to the EURUSD daily update. Today the 2nd of August, and we will start from the daily chart of the EURUSD. The red line on this chart is a MACD predictor indicator. This is almost the same as the MACD. Look at this simple MACD. When the MACD line is crossing, the price crosses the red line of the MACD predictor. So the MACD predictor is a derivative indicator. Well, and it tells us to see such price action like it was during the previous week. Look at this. On the beginning of the day, market show shift trend turns bearish, but at the end of the day, market closed above the red line and didn't confirm the shift trend. This happened again and again, here again, and even on Friday, market opened below the MACD predictor line but closed above and didn't confirm the trend shift to bearish. What does it mean for us? This means that those people who enter short on the unconfirmed signals hide their stops somewhere above the market, and I think that the stops can be hidden just above the XOP target and the weekly confluence resistance area. So it means that during the previous week, people who enter short were wrong. For now, I do not see any sell signals yet, except the bearish divergence here with the MACD. But this is not a very reliable signal for me. I just want to note it because some of you use it for enter the market. Well, let's discuss some levels on the market that for me looks important. First of all, this is the weekly pivot point at 130.12. Second, this is confluence support area 128.74, 128.84, and my preferable support is here. Also the confluence Fibonacci confluence support 127.43, 127.46, and 127.86. This is the monthly pivot point. So this area for me is very strong support, and if market will start its move down to the downside, will show us some sell signals in this area. This will be the first area that should stop the market on the downside. From this area, market should bounce a bit and make this retracement. So this is for me the first target of the possible down move if this move will start from this area and if the market will show us some sell signals right here. Let's turn to the 4-hour chart to see how we can trade here. This is the 4-hour chart of EURUSD, and the bearish divergence looks clearer right here. Here it is. Also we see the bearish wedge pattern that is forming right now. So I think that we can discuss two possible scenarios during the nearest couple of days that can happen on the EURUSD pair. What scenarios? These scenarios of the break of this wedge. So the first scenario is a classical break when the market will reach lower border of the wedge and start to move to the upper border, but will not quite reach it and start to break to the downside. This is the classical scenario. So in this case, we can wait until market shows us the moving just below the weekly pivot point. By the way, this is it, 130.12, the weekly pivot point, that's blue line. When it shows us strong move down below the weekly pivot, then the hourly trend will turn bullish, bearish, daily trend will turn bearish, and we can enter on the retracement of this possible thrust down during the break of the wedge. But I prefer to see the failure of upper break first before market will start move down. Why? This is very interesting situation. First of all, as you remember, we just discussed the MACD predictive failure pattern on the daily chart when the trend turns bearish in the beginning of the day and didn't confirm at the end of the day. It means that when this wedge is forming, there are many people who enter short on unconfirming trend change and hide their stops somewhere above this wedge. When the market shows the upper break of the wedge, it means that the stops of those people who were wrong will be clearing out. The second interesting moment that when we see the upper break of the wedge, the breakout traders will enter the market on the long side. We know that just above the market is strong confluence resistance area and XOP target on daily chart. So the breakout traders will be trapped and they will be wrong when the market starts to move on the other direction, where the breakout traders will hide their steps. On the classical approach to the wedge breakout, these steps will be just below this lower body of the wedge. So when the market shows upper breakout failure, then market will start to move down. This will be my signal for enter short, even if market will hold at this moment above the weekly pivot point, because this will be the washing rinse when the steps will be cleared out of the people who enter short on the previous week, and this breakout will trap the breakout traders. And when the market starts to move down, the steps of the breakout traders will exacerbate down move. This will be like the fuel for the down move of the market. And this will be my signal for enter short. So any scenario will be interesting for development. Just wait for possible breaks of this wedge. That's been said. The classical breakout, we should wait until market will move below the weekly pivot point. If it will be the thrust, this will be much better, and then we can enter on a retracement after the breakout. The first target of this possible down move is 127.50 roughly area. My preferable scenario, this is the failure break up of this wedge, and when market will start to move down, this will be wash and rinse of these highs. This will be my signal for enter short. Good luck everybody. I think my analysis, hope my analysis will be useful for you in trading.